Good morning, everybody. Welcome to DYOR Live here. I got to look it up. June 9th, 2023. It's Thirsty Thursday. And as we all know, on Thursdays, we do Thirsty Thursday and Bitcoin and baseball. And we do it because generally Thursday is the last show of the week. Not all the time, but we got in the habit of doing it on Thursday. And we tried to cover, light or heavy topics all week. And so we want to get out and have a little fun, have a little bit more lighthearted content on Thursdays. Talk two things I like, crypto and baseball. So we end up with Bitcoin and baseball. So let's get the show started. I always say it. I love it. Love hearing those little intros. I know the audience doesn't like to see them. They want that quick hit of instant gratification, but a little intro doesn't hurt you. I did make it about half as long as it was because I noticed the drop-off rate was too much during that, so I shortened it up. Anyway, we've had a good week, and thought we'd get started with a little fun this Thursday. I can already see my computer is maxing out on its CPU again. Lovely. Let's just stop the background music, see if that helps at all. It did. Anyway, good morning, everybody, or good afternoon, or good evening, wherever you're coming to us from. My name is Tom, otherwise known as Striking, here in the digital media world. Once again, today's show is DYOR Live. We've been doing it all week for a couple of months now. And you're watching it on the DYOR Media Network, or you're watching it wherever whoever has stolen my embed and plugging it into their website. Taiwan, China. When you watch the analytics for these things, you see some weird websites that you get referrals from. And they're not clicks. They've taken your content and just embedded it in. And I leave the embed allowed because I embed it intentionally in other places. But people put it in. Anyway, it generates engagement and traffic for me and views, so I really don't care. And as always, thanks to the company behind me here, Auditchain, for being my presenting sponsor for all of the, as I say, the DYOR original programming. That would be this show, DYOR Live, and of course, Rugged, Ruined, and Wrecked. Haven't had a new episode in a while, but I'm working on one. I love that show. That's probably my favorite. Even though I love talking to everyone here in the morning, I think Rugged, Ruined, and Wrecked is my favorite. Let's get a little word out in the social media here to drive some traffic here. Tuning in so far, welcome everybody on LinkedIn and YouTube. As always, if you got any comments, drop them in the comment section. I'll get to them. If they are on Twitter or on YouTube, I'll bring them up on the screen. And if they're LinkedIn, my comment program doesn't do that. It doesn't do that. Anyway, let's get to the heart of the matter today with the week that we've covered. I shouldn't say just the week, but the heavy topics of the past couple of days have been a lot. I like to say on this show that I do things for the new person, the people that are getting educated in crypto and want to learn about the financial markets and so forth. And we've weeded a little bit into more technical things because they've been in the news. And then we're talking about, obviously, the crypto regulation that's going on, the involvement of the SEC. If you're a regular watcher of this show, you've heard me talk now for months, or at least since March, about the government and the U.S. government and their lack of cohesive regulation for digital assets, and they're trying to pigeonhole them into the old 1934 Securities Exchange Act, which doesn't work, but they're trying. Anyway, so to recap, we've had some interesting topics. We had tax strategies with Taylor Zork. Taylor, one of these days I'm going to ask you where you got the last name from. I don't have a very common last name, but yours is even more uncommon, but it's only 4 letters. Anyway, we learned a lot of good things about what is not a taxable event. Is likely, and obviously depends on your jurisdiction and what you're doing. We learned things like just adding LP to a token or to a liquidity pool somewhere as a taxable event, because you've sold something to then buy that liquidity pool, buy into that liquidity pool. So if you look at your wallet, there's a buy and a sell. And if the IRS looks at your wallet, there's a buy and a sell. So they're like, you sold something and you bought something. So you had to sell something. Did you recognize a gain or a loss on it? And you put it in here, you buy something, you got an open position. Is it short term? Is it long term? Where are the capital gains? And it's interesting, there's a little argument now about the pulse chain airdrop. People sacrificed, I guess almost 2 years ago for that. And that's in essence when they put their money in. They didn't actually get the tokens airdropped to them until recently. But people are saying, hey, I invested in it 2 years ago. We're just getting the tokens and I'm allowed to sell it. So now that's a long-term gain and I'm not taxed at the short-term rate. And there's a little discussion about that. IRS, I'm sure, will rule on that. Not in anyone's favor. Anyway, so we talked tax strategy. I need to make a note about that pulse chain thing. Cover that on a future show. We also had a very good discussion with Jimmy Lenz. Jimmy is the executive director of the Pratt School of Engineering's master's programs in fintech. And I had him on, and he talked about how Duke University's Pratt School of Engineering, Duke University runs everything in fintech through their engineering program because they're teaching people how to design, test, and build blockchain technology, smart contracts, everything having to do with the back end of how blockchain and fintech, those are broad terms, I get it, how they run. So anyway, he's on talking about that. But more to the point, Duke is very active in Washington, D.C. with their Duke in D.C. Government Relations Group. And they're I don't know what their primary purpose was, but the purpose I'm talking about is helping get a fair playing ground for crypto. And specifically what Jimmy was talking about was pushing for what's called a sandbox, in which the government says, all right, we don't exactly know what's going on yet with crypto or in any industry. And it doesn't quite fit into what we've already regulated things. So let's create like a sandbox where you can do no wrong and just try things, where you can have limited amount of products, exposure to the market, you're not at risk for prosecution, and we just try things, and then we see what works and we put it out into its own category. And one of his things that he talked about that was really important that didn't really strike me as that important until we talked about it, was why does crypto have to be a security or a commodity? Both securities and commodities are just things we dreamed up in law and said, all right, we have securities, there's equity investments and other things. And, all right, we have commodities, agricultural traded stuff, and also that they handle the futures markets for certain things. Interestingly enough, what I learned was that commodities handles the futures markets on an individual contract basis. They manage those and regulate those markets. But the SEC handles futures markets, like if you wrap a bunch of them up and put them in a fund for itself. So it's a quagmire. And we're trying to put crypto into this quagmire. So we had a good discussion on how that crypto should be its own category, just like bonds are their own category. Bonds are bonds. And crypto should be crypto. It shouldn't be a security or a commodity. And that makes excellent sense to me. Excellent sense to me altogether. Let's just check something real quick here, make sure I'm running. I am. All is good. So anyway, then we also recently had Of course, we a number of times in the past week, either on my show or on the Brink, my sponsor Auditchain's a podcast that I host. We had Jason Myers on talking about. Recently, we talked about how the Coinbase and Binance problems with the SEC are based in law, based in Supreme Court decisions, the Howey test, and all that type of stuff. Supreme Court decisions on what is a security, what is not a security, and how Jason, for a long time, to much chagrin with people on LinkedIn and elsewhere, was talking about how eventually the man's going to come. As I refer to the man, it's Gary Gensler, as the Grim Reaper. He's going to come and do his thing, which he did with Binance and Coinbase recently. And then we talked about the timing of it, about how the House Agriculture Committee, which regulates the Commodities Futures Trading Commission, which is asking for a larger budget and more authority to regulate crypto, especially the spot markets. The SEC rushed to get out their announcements for Binance and Coinbase right before their hearing started. It was very weird, and the CFTC guy in the House of Representatives, people on the board, were like this. Not happy at all. Anyway, so those shows have been are in our YouTube channel. They're very good. I suggest you go back and watch them. We'll hit all of those topics again. And we could talk about the SEC and all that forever. But today, we'll only talk about that later. I haven't heard from Pedro Garcia. Not heard from Pedro. Let's ping him. Pedro's my technical analysis guy. He's in Seattle, so he's not quite reliable here. But when he gets up, we'll do a little technical analysis with him, because it's 6:20 in the morning. Although day traders on the West Coast, they get up early. They gotta, because the market's up and running. Anyway, let's get to the important part of the day, and that would be finding out what the Nice Lounge is talking about. For those of you who don't know, the Nice Lounge is a bar in Chicago near Wrigley Field. It's been around since 1951. Used to be a bar for the Bears and the Cubs. Bears used to play at Wrigley Field. Bears used to play at Wrigley Field a long time ago. They played there for 50 years, like half a century. People don't remember that. And the people that live here in this neighborhood now, or not where I am, but in Wrigleyville down the street here, they don't understand that the Bears played literally for 50 years in Wrigley Field. Let's see. Always good stuff from them. In case anyone was wondering, not even commercial bolt cutters will chop a metal Amex card in half. In case you wondered what we do during long Cubs road trips, the Cubs have been on the West Coast, so that. But anyway, it's the local bar that is the most identified with. As they say, if you are a technical analysis or a trader of Bitcoin, you will know exactly what's going on. I'm not going to tell you anything new. But one of the things that I do talk about with Bitcoin and what it's doing is the effect of regulation on... Oh, look at that pump. The effect of regulation on Bitcoin. And I would say the effect of regulation on Bitcoin so much is that the effect of bad news, unexpected bad news from the market. And we have a serious amount of bad news from the market that comes from our own government, and that own government is our SEC. And the bad news is that they've decided to not work with industry. They've decided to be against the industry. And the industry we're talking about here is just the crypto markets. And not just like one little section of it, like everybody. I believe they're in court today to seize all of Binance's assets. Not just the Binance US wallets, which is its own separate entity from Binance.com, but all the wallets that they have said are linked and have spread money back and forth between things, and that's entirely not fair, because if you haven't I took my money out of Binance. If you haven't taken your money out, you could get it seized by the U.S. government, and it could wind up stuck in court for a long time. Now that the SEC did file what's called relief for customers, meaning that they'll seize all of their stuff but allow people to take their money out. Incredibly complicated. Could take a long time to do that. You might not have access to your money during major moves in the market, which is just, it's not good. It's not good at all. Let's just switch this graph here so we can see it better. Anyway, so the major moves in Bitcoin recently come down to the regulation here. This dump that you see here behind me was the announcements of Bitcoin. Again, I'm confused. Binance and Coinbase being regulated. Specifically, this was the after Binance was the BNB chart. It's just, in fact, all the charts are bad this day. But as you can see, the market came right back up. It pumped. People saw the dip. They said, all right, well, if the exchanges and everyone's not going to be legal, Bitcoin's already ruled a commodity outside the purview of this. Let's put our money back into it. And it pumped right back up. And so everyone's like, all right, well, big deal. The Fed puts out news all the time, and the markets go up, go down, and all this kind of stuff. And the SEC put out news, the market went down, and it came up. There's a difference between what the Fed does and what the SEC does, and it's very important. Because what the Fed does is when they announce things, they tell people they're going to announce things. And that there are businesses all over the world that try to predict what they're doing, and the market builds in to the market, and people know that easing's going to start, easing's going to stop, rates are going up, rates are going down. They almost always get it figured out what the Fed's going to do. And so it's expected. Markets like things that are expected. Markets do not like what? Unexpected things. Like this crap here. They don't expect the SEC to come out and tank your markets. And so people have trading strategies not based on the SEC. They have trading strategies based on the Fed doing things and all the other things that they watch. And whether the SEC is going to prosecute the biggest players or not, that wasn't one of them. So what happened here when this market tanked here and went down here, there was trading stops all in here, and people got stopped out. And Twitter, I point here because this is where my Twitter feed is. People point to them all the time. Said, I got stopped out because of Gary Gensler. The Grim Reaper stopped me out. And people are like, well, that's the markets. It's crypto, tough. But this is different. It's different because the pricing here of not only of Bitcoin, but BNB, you look at the charts from this day, everything was down. Even your local meme coins were like, screw this, we're selling off. Because their liquidity pools are linked to one of the major coins, except, of course, for Gensler coin, or Gensler token, which is a stick in his eye. That pumped like crazy. It did like a 10x. 10x that day. Anyway, thank you to those people that have joined me on YouTube. If you are watching, drop a comment. Let me know. You have to subscribe for only 1 minute to do so. If I don't put the rules on to say subscribers only, the spammers that show up and put the most awful stuff there, they're just ridiculous. And normally the hold for review comment section gets a lot of them, but not all the time. So now all of a sudden my screen's full of really bad stuff. So all you got to do is subscribe for 1 minute. That's all I ask. Anyway, and so once those stops get hit, people lose money. And the SEC view, if you go back to the tweet that Elon Musk did a long time ago that said, I am taking Tesla private with a private wealth fund for $400 and some a share, or the plan is, or whatever, or confirmed, or whatever it was. He put out a tweet because he wanted to buy the company back because he's sick of the public reporting. Anyway, the stock pumped to that price. Well, there's a whole bunch of people shorting the stock. Guess what? They all got stopped out. They are liquidated. I mean, and they lost a lot of money, and they sued, and they said, hey, we lost money, and the SEC's like, you're right, and so they sued Elon Musk too, and said, look, these people lost money, even though the stock immediately came back down, and there was just a bump like that, and then eventually the stock, for everybody went higher, but those shorts lost a lot of money because of it, so they sued. Ultimately, they lost. They lost, but the SEC, that's a case in which they lost because Elon fought it. This is interesting. This is new. I love it when you learn something new from YouTube. It's telling me you're going to run an ad for some viewers here in a second, and I can skip them or not. Anyway, I'll wrap it up before that happens. And so the SEC prosecutes based on that minimal loss, not the overall health of the market or where it goes, but if your event causes loss to any single person, the SEC can sue you, and they did, in Tesla's case. They also did it recently with McDonald's. McDonald's got sued because the SEC said that McDonald's didn't report things correctly about the malfeasance of their CEO. And it would have affected the stock differently had they reported it correctly. I'm going to take this time to check on LinkedIn to see how that's doing. We're getting a note from YouTube saying that ads were put in. I like how they tell me that. All right, where is LinkedIn? Copy link to video. See if this blows up my CPU. I have an i9 10th generation with a 2080 Super in it and 64 gigabytes of memory. And sometimes my programs run at 100% here. Yeah, I don't get it. See if this blows up my CPU. I have an i9 10th generation with a Thank you to those on LinkedIn for watching. 64 gigabytes of memory. And sometimes my programs run at 100% here. Yeah, I don't get it. Really appreciate it. Appreciate those that are watching. Appreciate those that... Thank you to those on LinkedIn for watching. They watch it on the replay as well. Sometimes my programs run at 100% here. All right, we gave you the update on what's going on the past few shows really here, these important shows that we've done with tax strategy, with everything else. But what we haven't done now is talked about baseball. The striking junior is up and at him going to work, so I was a little distracted there. Dunkin' Donuts is across the street. But now it's time. It's time for the important part of the day, baseball. That's right, ladies and gentlemen. Bitcoin and baseball it is. Major League Baseball has been interesting this year, mostly because I can barely watch baseball. As everyone knows, I switch between YouTube. I switch between Chicago and Canada, and my card is based here in Chicago. So if I buy MajorLeagueBaseball.tv, they black me out. Doesn't matter where I am. They say, "Oh, you're a local. Your credit card says that your account is in Chicago. That's a local market for Chicago. You can't watch it." So I can't watch any of the Cubs shows, even on the internet. It's ridiculous. It's the dumbest thing I've ever seen. And Major League Baseball, you need to fix that. You need to figure out a way to say, hey, the viewer may be based out of Chicago, but they're overseas somewhere, or they're in Philadelphia, or they're in Los Angeles. Let them watch their home team. It's just ridiculous. There's a lot of people that are baseball fans and travel. Not everyone. And most of those people have a credit card that's in their local baseball viewing district. Anyway, so we have some it's just let's see. Let's just go with the standings first. It's driving me crazy in the standings. Let's get right to where the Cubs are. Oh, second to last place in their division now. Lovely. Yeah, let's put this over here. The White Sox. Nope, they're second to last. The White Sox are second to last, but the Cubs are also second to last in their division. Only 426, which isn't the worst in baseball. Washington is at 410 with a 25-36 record. But the Cubs' 26-35 record is not stellar, and it's because they had a good first couple of weeks of the year. Their record is a lot better. They should really be in last place behind St. Louis. Although it does warm my heart that St. Louis is in last place. That's very good. But the worst team in baseball right now seems to be the worst team in National League is Washington, and the worst team in in the American League is obviously the Oakland A's. I thought Kansas City was bad, ladies and gentlemen. Last week or 2 weeks ago, we talked about Kansas City. But now Oakland is 14-50. I mean, come on, guys. I'm gonna give it up for that. Just pack it in. That's you're only winning 2 games out of 10. Not good at all. But what does the Bleacher Nation have to say about the Cubs? Roster moves. That's right. Miguel Amaya is getting starts every day. That's good. I don't know if you guys have seen the fire picture, forest fire pictures. But this is amazing here. This is Yankee Stadium. And this is, my friends in Canada have had enough of us Americans, so they sent their fire down. And it looks like it looks like the rover Curiosity or Pathfinder or whichever the one is that it's on Mars now. It's doing a little live stream, and it turns out Mars is populated, and there's a baseball team, and it looks just like Yankee Stadium. But that's New York, and that's all smoke from Ontario, Quebec, and a little bit from Nova Scotia. And one of my friends in Canada said, this seems to be an event that will finally teach some Americans where Canada is. So most of the Canadians or most Americans just see the weather, and they just know where Canada is because they say it's cold, and there's an Alberta Clipper in. Even if the cold air is coming from Ontario, they say, there's an Alberta Clipper coming in, and it's cold. And then the winds come out of maybe Quebec. But anyway, so now the Northeast part of the United States is getting a little taste of Canada's medicine, saying, if you look at the map, we're above you, and we're just taking one big fat dump on you. Anyway, that was, as they say, a tangent and a digression. Let's find out what the Nice Lounge. Stop calling and asking. We are open at least 2 hours before any Wrigley Field baseball game or concert. Well, that's the goal anyway. They don't. Doesn't actually happen. Staffing's difficult now in the hospitality industry, so depends on staffing. And they allow pets, but not on event days. The other good bar over there is the Lucky Door. It's actually in the Cubs Plaza, in between the stadium and the Cubs headquarters. Great little bar. It's only about as big as your kitchen, but they always have 10 or 20 beers on tap, and they have no wine. And they have, I think the booze they have is Jim Beam or a bourbon of some sort. Sometimes they have a tequila and Malort. And if you don't know what Malort is, you're not from Chicago. Striking Junior back here is commenting, it's so bad. Nice Lounge. Don't get us started on beer menus insisting old style beer be listed as G. Heilman old style. If you're from Chicago, you know what old style beer is. Let's see. New keychain for the bars, new dumpster padlock. Looks like the hall pass for the bathroom a long time ago. Let's see. There was a couple funny comments about the Cubs, but I can't find them. Let's find. Let's just find the general comments. These should be good. Let me take a quick check here to see if Pedro's around. No Pedro Garcia. Cinco de Pedro. Not happening today. Here we go. The video doesn't play here when I put the comments up, but it's a video of Ian Happ striking out on a ball that bounced in the dirt. Ian Happ feeling as frustrated as the rest of the Cubs fans do. I can tell you that for sure. Let's see. Davey Baseball says, Jed Hoyer, David Ross, and Carter Hawkins should not have jobs going into 2024. How the hell are you going to say this isn't a rebuild, it's a retool, and have this as your product for a third straight year? Just an absolute piss-poor organization. I might add, they used the wrong poor in this tweet here. But that's the indicative of the fans just heading to the bars and saying, pour me another one. It gets even better. Until fans stay home, Cubs have nothing to gain by putting together a winning roster. No accountability, no winning. It seems like the season Major League, from the movie Major League, is going on. They're just trying to be crappy. We started out, I don't understand, we started out really well. We were winning, I think we won our first 4 series in a row. And in baseball, if you win series, if you win 2 out of 3, not 1 out of 2, 2 out of 3, 3 out of 4, you're going to win your league. All you have to do is win the series. Obviously, there's a bazillion things you need to do. You need to have good players, you need to get hits, have good pitching, blah, blah, blah. But if the results are winning the series, you win your division. So we started out winning, like in a row. We won the most series in a row that we've won in a long time. Then, like the old VH1 shows, when they chronicle the rise and fall of the stars and celebrities, how their career is going great and the music's great, and then the music changes to grim and doom, and they say that's when the drugs started. And that's what happened with the Cubs. They were doing well, and then they weren't. Cliff Floyd, everyone agrees with you, Floyd. Everyone agrees with you. Cubs are not doing well. I know firing David Ross midseason doesn't really help, but my God, something has to change. A statement needs to be made. This team is an embarrassment. You know, I take this and I laugh about it. I mean, the Cubs have been, crappy for generations, and we had 5 years of like, hey, something good is going on here. I mean, we had some anomalies like the 2003-07 season, 2007. Mark DeRosa talks about that that wonderful season on MLB Central all the time. MLB Central, a show that if you pay for MLB TV, you can't get their show MLB Central. They're like, oh, you have to have cable for it. I'm like, you get MLB TV because you don't have cable. Don't understand these things. Anyway, talks about that glorious season in 2007 where we were rocking. We were going to beat the Florida Marlins in order to get into the World Series, and we were up 3-1. And the Marlins came back, won 3 in a row, and we sucked. Let's see. What does Nathan Graham has to say? Taking in another Cade Horton start tonight. Yeah. Actually, Cade's been doing really well. What are the other good things? Like, you won't be able to see it. It's a meme, but it's two dogs. One's a White Sox fan. One's a Cubs fan. Nothing good going on. Noah Syndergaard is no longer, or Jason Talon is no longer the worst pitcher in baseball. Now, Noah Syndergaard is. All right, ladies and gentlemen, the striking junior's off. Let's get a quick check on the markets here. What's going on today? As we can see from the markets, not much going on today, thank gosh. The high and the low in the past couple hours has only been about 150, 200 bucks difference in Bitcoin. This is where I'm supposed to bring Pedro back in to talk about technical analysis and an overview of the markets, and he throws some conspiracy theories in about the markets and all that. But he's not with us this morning. Let me check again. Nope. Interestingly enough, this little sell here is indicative of market makers trying to get some volatility going. They dumped. One of the things I've been harping about lately is you can't really see it that well on this, but this is the 1 minute chart. So this just happened recently. This little dump here, and if you're a Bitcoin guru or a trading guru, drop me a comment and let me know if I'm on the right track here. But what I seem to be finding a lot is see this little dump here, and then the immediate buyback of it. It's my opinion, and it's only an opinion, that groups like this group here, I won't say their name so YouTube picks their audio up or their speech translation up, and others, before they're about to buy some more Bitcoin or whatever they need for their wallets or to back their reserves, they dump a big portion. Say they need to buy $10 million in Bitcoin. First, they sell $10 million worth, and then they buy $20 million worth. So in essence, their position is up $10 million. And the total value of it works out to be the same because when they sell, the price goes down, they buy lower, but they buy more, blah, 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 blah. And so, but what happens is when they make a dump like that, they clear out all the people that have shorted the market. Not long-term shorts, because their stops will be in a much different place. But the guys just day traders just watching, saying, looking at, the minute by minute, the 1 minute, the 5 minute chart, technical analysis stuff, and they're like, all right, here's a pattern here, here's a wedge, here's a rising, some falling wedge, whatever. And it just seems like, because I don't trade futures much. It's every once in a while when it's in the news or a new service comes on, I'll take $500 and I'll basically treat it like the craps table and see what's going on with their futures markets. I get stopped out by these movements all the time. And it's just like the exchanges just say, let's clear them out. Let's sell a whole bunch. We'll clear out all the longs, and then we'll buy right back. And it goes up, and then all the longs that got stopped out are like, what just happened? So they take your money, and then they buy more, and the price goes back up. And so, of course, that makes you want to keep your stop loss at a much lower level, more room for loss. And then the next time when you get stopped out, because you're not paying if you take your attention away from the market for 1 second, you get stopped out. And you have a much larger loss. And it's my opinion that they're doing this on purpose. Like I said, I don't have any scientific proof for all that, but you know when you see the markets and you're like, what's going on here? I was on the fence when David Ross became the coach. I don't know. I didn't like it. He came out of nowhere to be the coach, and hold on. Let's came out of nowhere to be the Cubs coach. My CPU just went to 100, and I did nothing different at all. Nothing different. Nearly every decision David Ross has made this year has been bad. Tonight is just another example. Pull a starter, up 4-2. Reliever promptly surrenders 4 runs without recording an out. Now the Cubs are down 6-4. It's time to admit Grandpa Rossi is a bad manager. We all understand that. We all understand that David Ross has not been up to our things. Up to our standards. First of all, one of the things that he went through, which shouldn't make a big difference, but he went through a change in his personal status with his wife and that type of stuff. I'm not going to bring up any personal items other than he went through a period of tumultuous decision making and when your emotions aren't right. And that's difficult for any human, and I'm not blaming him for that, or that happens. It's happened to me a couple of times. But when that goes on, baseball is an all-year thing. It's very intensive. It's not, on TV we see managers sitting back going, spitting and just occasionally raising hell or something like that. But baseball is much more intense than that. And there's a lot of behind-the-scenes thinking and stuff going on and trying to plan correctly. And you have the press on your ass all the time. You have the fans all the time on your ass. Now that Twitter's alive and social media, you get beat up constantly. I don't know why this is doing this. I need to close some of these. See if it's the Major League Baseball website. Seems to be. All right, let's go back and see if... Got Pedro on the line here. Not yet. Anyway, we don't have that much time left on the show, only about 15 minutes. But I like having Pedro come on. Bring some insight and some conversation. Let's see if we can get him again. Ryan Herrera has I'm going to try and rebuild this thing so you can see the pictures better. But his graphic here, shows Kyle Hendricks started the game and we had the Cubs up 4-2. And all of his pitches are right in the zone here, with the Cup only one pitch far and outside. Snell came in. He couldn't even get anything near the batters. Everything was outside or inside if a lefty. And it looks like only 2 of them. A couple of them were called strikes, but they were off the plate. He's lucky. Only 2 of them were proper strikes in the strike zone. Come on, guys. Come on, guys. I got to tell you, having pulling a pitcher and then having bad mid relief pitching and having a bullpen that's just I can't remember who's the Cubs pitcher, the Sheriff that wears the shirt, failed starter. It pains me to no end to see bad mid. There's Pedro.
Hey, brother.
Hello, sir.
Hey, I didn't want to bother you. I know you were in the middle of expounding on some sports stuff. So.
Yeah, it's Bitcoin and baseball day, and we've talked a lot about baseball. and I gave my just general overview about Bitcoin in the fact that what the market has been reacting to. About news from the SEC and so forth, blah 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 blah. Just kind of bantering about it. Had the chart up for a little bit, but I didn't, because I'm not good at it. I didn't give any technical analysis at all, and so I thought, wow, let's see if Pedro's up for a little Cinco de Pedro.
Yes, sir. Yes, sir. Well, jump right in. When we look at this here real quick, like I talked about yesterday, we're in between moving averages on the weekly and on the monthly. And so because of that, we're going to see a ping pong effect like I talked about yesterday. And so this is what we're literally seeing, is a ping pong effect where it hits.
Just quickly, could you point to the two moving average lines on your chart for viewers?
Yeah, thank you. So this line right here, the 20 moving average right here.
Yep.
Okay. See here, and then we also have that 8-period moving average, which is sitting right here. Let me go ahead and put, sometimes TradingView will remove my my things there, and I don't know why. Just maybe it's my own computer. I always blame it on myself and try to make sure that it's not me, right? Like, best way in life, I once I heard from a master sergeant was simply saying, Pedro, act like it all is your fault and figure out whose fault it really is. And I was like, that's actually really smart. Like, because then you then figure out, all right, so this is what needs to happen and blah, 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 blah. So, all that to say, we can see here that we are ping-ponging off of these little areas here. So you can see here that we hit that weekly 20, the weekly 200, and the weekly 8. Now, we did sell off past, but this is also monthly areas. So this is the monthly 50 SMA here.
And what's the S? What's the S stand for in SM? In
sorry. Simple moving averages. Yeah.
And that's the tick it uses for that day is the average for that day of all the trades going on.
Simple moving average
for the period, right?
Yeah. So, like, obviously, if I switch to a day or a 5-minute or a 4-hour, right, it'll change its trajectory calculate. So, for the weekly or the monthly, you can see here how we've been ping-ponging off of that 50 and that 20, right? And then it'll come back and test that 8-period moving average here. And so when I look at it, I simply just say, okay, where will it most likely want to go? So for me, that is what I'm always looking for. It always wants to draw down to the higher time frames, because institutions are always starved for orders. And so because of that, what we're always seeing is this fight between one over the other. And I know that sounds kind of weird, is they have so many clients that they have to put into the market that they need the opposite end. And so because of that, we then see a flip in the market based off of what clients are needed. So let's use Jim Cramer, whom I always talk about, right? If they need buyers, okay, well, because they want to short and push the market down, they're going to say, the sky is raining gold and, diamonds and rubies. Buy it all, get it all, right? And it's happy. And so everybody starts to buy. Buyers step into the market that are the novices, i.e., right, the corporate machine, banks, goes through and they take the other side on a large scale, which is the sellers, right? And so they are then coming in and putting the sales in to the buys, because whenever you need a buy, and anytime you have a transaction in the market, you need two agreements. You need the buyer and the seller. And so what happens is the spokesperson, whoever, when Jim Cramer passes away, there's probably somebody else out there who's being raised up. I mean, just being honest, right? Like, as we know, they always, somebody, they have a person and the person behind that person, and there'll probably be a third person just in case.
I hope I'm on that list.
Hey, there we go. I don't want to be.
I'm way down in that list. Way. It's like where I am in the line to be the king of England. Everyone that's whose ethnicity it comes from Europe is ultimately in the line of succession for one of the monarchs there. They're really far. A lot of weird things have to happen, but I'm in that line. Same with Kramer's seat. I could be the next one.
You could. There we go. All right. Yeah.
That's optimism.
I love that optimism. That is the optimism where you want to be on a day where the market's sideways. So when we're looking at the markets here, the market's always trying to go to higher time frame, moving averages, zones, or whatever indicators that you're looking to trade off of. So these are my indicators that I use. I use a very basic. I'm just moving averages and zones, and I pay attention to where wicks are coming in, buyer wicks and seller wicks. Those are the three primary things that I pay, and I keep myself on a very meta view to understand which direction the market wants to go. So I then go through and I go to the higher time frames, right? Like the beginning of the year, I pull the 12-month, right? And I look, I go, okay, we had a big sell-off. Where did we open up at? Boom. Look, we opened up at the beginning of the year right here at that 8-period moving average. I thought we were going to come test the A and sell off, but we didn't. We kept pushing up. But here's the indicator that I want to point out. Do you see any wick here for this year? No. But look, you see here, right, where we see these push. I think we're going to have a similar situation like this. Boom, boom. Then we see a small wick. But do you see how it rallied up and then came down?
Yep.
Well, it's a similar situation that we're probably going to see. We might see this thing come back up to 30,000 or 40,000-ish. I doubt that. I think we hit the 50% mark here, right? And that's now we're seeing the sell-off. And that sell-off is going to give us a wick, and then it's going to come down and put in a buyer wick. This is why I keep saying that we're going to come down to that 12,000, 10,000 mark area.
You really think we're going all the way back down to 10 or 12,000?
Well, yes, because remember, like, when I sit there and I talk about we're ping pong and we're creating wicks, right? There is no wick here. There is no wick here. And there's too many buyers here volume-wise in comparison to buyers and volume here that we used to have. So that's just not.
What are your thoughts on the general time frame for that? Like this year, the next year, you'll look at the yearly candle for this year, and you'll show that it would have happened. Is that kind of what you're telling me?
Well, it's not. It's already happening. We're already like. It's okay. The book, The Fourth Turning?
No.
Do you know what that is? All right. For all your viewers, go read it. It's basically a book that explains the situation that we're in right now, literally in the time, meta view of time. Ray Dalio talks about it in Principles. And most people have seen Principles. He's actually referring to a thought process that is a meta view of time, which is called, and in the book, The Fourth Turning. This book has been around for almost 30 years, almost going on 40 now-ish. And he goes in and he basically predicts 9/11. The book predicts.
Yes, I know what you're talking about. Right. I thought you were referring to a trading style book. Right?
No.
Yeah,
The Fourth Turning. So I'm using this because this is the same idea that happens in trading. It is a repeat of cycle of trading. So you can see here, we didn't put any wick here. I think it was 2 points. It's very, 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 very small. It was like, I was shocked. I was like, that's all we're going to get. That's literally what I thought to myself. Like, I was like, they're coming back down. They're going to push us up, bring all these people. So what is that? Excuse me, not 2. It was in comparison to how much a market moves in a year, right? What was it? 569.59. 49, 49, come on, 49, 40, 50, 51. So pretty much 51 points, give and take on all the other exchanges. So I just kind of rounded. So 50 point for which is basically not even a 1 hour movement in Bitcoin. Okay. So even an hour candle. So we put no wick in.
That's
and so
interesting.
because of that, it will most likely come down. We have the fact that we have a lack of volume in comparison to past times indicate as we're moving up. Okay, so here's the thought process to look at. If a market is getting a lot of buyers, as you can see, right? We see all these buyers coming in at these levels, at this low level, which was like $1,000, right?
Right.
Boom. Okay. You can see people buying it up, and then they sold off, but they're still. But remember, earlier we talked about if somebody's taking the buy, who's taking the sell? If somebody's taking the sell, who's taking the buy? Right. So that's what happened here. Boom. You have institutions putting it up. Boom, 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 boom. This is the same period that the CME got involved into Bitcoin and actually came out with Bitcoin futures, right? January or in 17. 2017. Then we had the sell-off, boom. And as a funny note, there was a guy who was Ubering at the time, and he lived in a very financial area in America. And he was like, "What do you think about Bitcoin?" I go, "Well, it's going to drop." He goes, "There's no way. I just took a mortgage out of my house."
Oh, come on.
I said, "Oh, bro, don't tell me." He goes, "I took $200,000. There's no way. It's going to go to $1 million." I go, "It's not. It's going to come down first." And he's like, "No." And I go, "Yeah." And he goes, "Where do you think it's going to come down to?" And I go, "Probably around 3,000-4,000, realistically." He goes, "No." And I go, "Yeah." And he bought in at like 18,000. And the market started coming down. I said, "Bro, please get out." He says, "I'm not going to get out." I literally thought to myself, there is a divorce here right now.
Yeah.
Like there is literally about to be a divorce because of
Honey, the sheriff's at the door. The man from the bank. Yeah, I know. Yeah. We got to go, honey.
Yeah. So anyways, long story short, you see this, what happens. So you can see the market plays the same thing. It never changes. Like it literally never changes. And so, because people are like, they've conditioned people like Pavlov's dogs. And so that's what's happening here. So it hit the 50% mark. We're going to see a sell-off. You can see here, if anything, it's going to at least come back down 50%, which is that 20,000 mark, like I said. Right. But I do think, right? I think, because there is no wick. At least let me see a wick here. They're going to come and put a wick. Okay. They're going to come put a real wick in here, right? Even if it's a small one, it's still a lot bigger than what we got here, right? And then they're going to take buyers sitting right here, most likely come down to this 15,000, 10,000 mark, where you have a ton of sellers, where people go, "Oh, the end of Bitcoin is here, the U.S. government," and it's probably going to be a U.S. government agency situation with the UT or TFTS. Why am I forgetting?
CFTC.
Yeah, CFTC. Thank you. The SEC situation. It's going to be a real life situation. That's going to affect people. They also use, and this is really interesting, I started going through global situations like the fires. A lot of money is on the East Coast. So there is a Canadian, and again, this sounds like conspiracy theory, but this is really like what happens. People's sleep are being affected. If people's sleeps get affected on a meta level,
right,
then you start to see a meta level reaction on things. And I know this sounds crazy. I just want you to know. I know I look like I have a tinfoil hat on, but this is literally like kind of what they do. And central bankers, these guys, like remember, that is it's not a government agency. They're an individual corporate entity, right? We know this. Like this isn't.
Have you seen the pictures coming out of the Northeast about
Yeah.
about what's going on at the. I mean, it's
Yeah.
crazy. I
Yes.
have family in New Jersey and in Connecticut, and all of them are like my aunt the other day. She said I can't see out my
Can't see the
kitchen window. I
sun.
can't see my street, and
Yes.
her street is only 200 feet away. I said, come on, you got to be able to see the street. She said, well, I
No.
can kind of see the cars parked there, but I can't see the pavement itself. I was like, my God.
Yeah, it's bad, bro. I have friends, dude, that are out there, and they're just telling me, bro, like, I want to move. Like, we need to move. Like, hey, and this is going to cause people are going to need money. Like, there's major science behind this that they're going to use. I forget who said it, but somebody said never let a catastrophe go without.
Yeah, never let a crisis go to waste. I think it was
Yeah.
Churchill or something like that. Here, I don't know if you can see the picture behind me. It's a picture of Yankee Stadium here, and it's like somebody had put a meme out or a joke tweet out saying, oh look, the Mars rover is doing a live stream, and apparently they found life on Mars, and it's Yankee Stadium. You know.
Yeah, dude, it's real. It's real out there. Like, I feel bad for those guys, real bad. So but it's one of those things. I feel like it is a circumstance that is part of uh, what's happening. It's just part of what's happening. So you just sit there and go, okay. I wish we could do. Is it a conspiracy theory? I don't know. I know people out there are saying like, no, it's not Canada. There's one guy. I was sitting there. He's like, it's this, and I was sitting there going like, but we can see on radar like what we can see. Like there's fires. The guy has a good explanation on it, but I'm just like, dude, you done drunk that Kool-Aid, my dude, way too much. Like, lay off the garlic mustard plants because they got cyanide in there, bro. A little too much there. But anyways, I say that because let's jump back into the charts here. Again, if you see here, we hit the 50% mark here on a retracement. Now we're starting to see a sell-off. The sell-off here will most likely, I believe, will come down to these lower levels where they're going to bring in a lot of sellers. Or excuse me, sellers. People are going to sell off their positions. A lot of people got in right here, right, and they pushed it up. Institutions, right, are also pushing it up. So people are getting in, right. So when they start to lose money again, they're going to sell off their positions, and the institutions are going to come in and buy up all those sellers, right, and then they'll allow it because they don't want to overwhelm the selling. So they'll be net negative,
right.
Sellers as we're going down, but the people who are buying are the institutions. And so they'll come in, they'll hit this area and then push back up. Now, this is a very meta view of the market. Let's jump back into where we're currently sitting now. Okay. Each chart is in control. Obviously, the yearly chart is in control over the whole entire year. You need to pay attention to both. Every month, look at your monthly chart, or excuse me, every month look at your monthly chart, and at the end of the month look at your yearly chart as well, so you can sit there and understand what they're doing, right? So you can see here on the monthly chart we hit that 50 period moving average, which is an institutional moving average that they use, right? You can see, you can go back and just back test this. Boom, sell off, boom, sell off, come back up, right? This is a monthly chart,
Right.
so you can sit there and see they went down first to go up. They went down first to go up. So they get buyers. Then they from here then turn around, come back down. They might bounce off the 50. I do believe they're going to come back down to at least that 23,000 area to get orders.
All right, Pedro. We're coming to the end of the show here. A quick question for you.
Yeah.
What are there any numbers we need to watch? Any public announcements coming out? The balance of this week or something we need to pay attention to?
So they already had jobless reports. It was actually better than expected. Less jobless reports, which is good in that economic report, which is fairly decent. We did see it push up at the market just a little. But really, the reality is for Bitcoin, we really want to be paying attention again to these levels here of that 27,000 mark, and as well as that 25,000 mark. Again, we're ping-ponging off of here. If we do push through, we're going to see a push through with volume, and then come back and get a retest off of this 25,000 mark area to go down if we're going to continue to go down for the month. So typically what they'll try to do is push it down for the end of the month to push it back up for the next month to push it up to push it down. And
Well,
you'll see this with
sorry, go ahead.
And you'll see that with where we're sitting on the monthly chart. They're pushing it down to push it back up to go for your 3-month chart, which is going to be then a push back up into the supply, because we're coming up to the 3-month mark in July or June. Sorry. Or is it the new 3-month mark? Forgive me. April, May, June. Yeah, July right here. So you can sit there and see the next third month is they're going to play this to push it back up to then continue it down.
All right. Well, we got I would say the volatility from the market based on the U.S. government doing its thing over the past week has been problematic. One of the things I'm noticing, and I just noticed this morning when I brought up the Bitcoin chart, because I used the Mexi Bitcoin chart just because it's easy to see on my screen. But it had a new thing up there saying, hey, your IP address is noted to be in the U.S. You're not allowed to use our services. And I know a lot of Americans use Mexi. And in fact, a lot of the people doing TA online, like Crypto Lifer and people like that, are even promoted and sponsored by Mexi. And all of a sudden, because of the recent action, Mexi's saying, hey, if you're in the U.S., you can't use our services. And what that is a hit on is I'm not just talking about politics. I'm talking about liquidity for the market. All of a sudden, they're removing, they removed, Coinbase is delisting a whole bunch of pairs. Binance is doing the same thing. Mexi and probably other exchanges are saying, wait a minute. And remember, the United States market is about half the trading for crypto. And there's market makers everywhere. I know that. But when you remove the ability of people to easily trade and to move liquidity from exchange to exchange to exchange so it's balanced, you get into problems like this where you start talking about, well, there's not enough buyers, there's not enough sellers, and because an efficient market, as everyone knows, has an equilibrium of buyers and sellers, and when there's not an equilibrium, extensive volatility ensues, or just inefficient pricing, or you can use a bunch of economics terms about it, but it just means all hell breaks loose. And when all hell breaks loose, the general retail buyer steps aside and says, you know what, weird stuff's going on. I don't understand the market. And I don't just mean like the guy that's at work and puts $100 into Bitcoin. I mean just the general day trader who relies on the things he knows about. When the market's inefficient, they're like, nothing's making sense. I can't make any money here. And so further liquidity is then reduced when a bunch of day traders jump out of the market too. So the U.S. government is doing no favors to anybody. And I wrote an article or a thing on LinkedIn yesterday about this. And I forgot to mention this earlier when I was talking about it. But the SEC knew they were going to wreak havoc on the market by doing this. And that means they chose to do it. They had a number of routes to go. Sorry, I'm getting on my soapbox here for a second. They had a number of routes to go. They could have worked with industry, and they could have worked with Congress. They could have worked with industry and Congress, or they could just say, screw it, we're going to sue everybody and enforce. And they didn't. They chose the enforce, knowing that it would hurt the market. And I went back and read, I'm trying to go back and teach myself the 1933 and 1934 Securities Exchange Act. And one of the things I got from it, is the general idea is that the whole thing was set up to protect the investor. Not only just to protect the investor, but as I say, the equivalent in the medical industry is the phrase, do no harm. And the SEC's, overriding guidelines is, hey, regulate the markets, but do no harm. And they chose to intentionally harm the market by doing this. They could have said, all right, these companies, we feel that they didn't fit into our regulatory scheme in 2018. And so, but they're new products, and we don't have any real legal jurisdiction here. We're not sure. It's a gray area. So let's figure it out. Instead, they said, yes, they should have done this. They should have been just like stocks and blah, 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 blah. And so we're suing. And so they intentionally hurt the market. And that's bad. That's bad when you have a government agency that intentionally hurts investors, hurts the confidence definitely has hurt the confidence of the market. That's for sure. And I'm not just talking about general Bitcoin, because that's different. But you're having literally people all across the U.S. now saying, all right, I need to move my business overseas. Yep. And so they're hurting the economy. They're hurting innovation. They're hurting the average investor, and they're hurting the VC investor, which is critical to innovation. That's my soapbox for today, ladies and gentlemen.
I want to ask you a quick, I know we got to go, but I want to ask you, do you remember when they really started cracking down for prohibition?
Yeah, I'm not that old.
Okay, no. Not remember, but I mean, like, do you remember what happened?
People warehoused booze. They set up illegal shops. They set up speakeasies.
Yes, the same thing happened in China, right? It became illegal to do it.
Right.
They legalized it. And the idea behind it was simple, right? That people are still going to do what they want to do. Like, that's the key, right? And I almost feel like that's actually what's going to happen. And I think there's almost a side of, like you said, a lot of people stopped drinking alcohol during prohibition, right? They were like, well, I just don't want to deal with it. So like you said, people are going to just get out of the market. But you're going to see underground businesses that are going to come out, just like we see in China right now. It's illegal, right? And please, it is illegal, correct? Or did they make it legal?
On mute there. Sorry, it's still technically illegal in China. They're opening up back in Hong Kong as their little experiment to try and bring it back. But we know from Telegram and all the Chinese people that are on it, that are in China, that plenty of trading still goes on.
Yeah. So the reason why I say that is the background behind it is that I think we're going to see that. You're going to see people come in. They're going to buy a lot of Bitcoin and stuff like that as we start to move down, right? The institutions want to push the smaller guys out. They want to have the market. They want the cost base of the market. And the only way that they're going to be able to do that is literally scare mom and pop people. The problem is because this is trustless, right? You can't make me. I can just hand down my passcode and and information from my wallet, right, to my son and teach my son how to do it and pass that down from generation to generation. These people down at the 3,000, 2,000, 1,000 mark, these are all people like you and me. These are people who went through that 3,000 mark, that, they are the ones that are still holding this. And this is where I believe they want to go back down to, right? Where we're going to see a huge drop. It's the same idea. They want it down. They want to move it down
What's the time frame on that chart there? Like all of Bitcoin history?
This is the daily chart.
Gotcha. So, look at that pump. And
like, they know, dude, like the way this is set up down at this 4,000, 3,000 mark area, right? And at these levels here, there are a lot of multi-billionaires that they don't want. There's a lot of people that they're not a part of the elite. And if Bitcoin goes, which I think, like I've showed you guys, within probably 10 years, we'll be at about 1 million. We'll be 1 million Bitcoin, basically 10 to 12 years, because of its push, what it does. But they want in. They want in at these low cost bases so that their posterity can rule. Like it's real. It's a big deal. You know, as I'm just talking here, but I think that's really important to pay attention is that, you know, who actually runs the government? The children of the government. Their children, literally their children. And those are the banks.
Don't get me started about the banks. The banks
I
are
know.
too big.
Well, here's the thing. Bro, the U.S. government, bro, is legitimately a corporation.
Yeah.
And it's not even.
Pedro, I got to stop you there. We could talk about the banks and the government and how they're not doing good for us lower level caste people in the investment scheme. But I got to go. Got stuff to do today. We've gone on today for a while. Pedro, once again, ladies and gentlemen, Pedro Garcia, the crypto analyst. He has a YouTube channel. I'll drop a link to his YouTube channel in the charts too. He's not on all the time, but when he is, he talks all day about Bitcoin and other tokens as well and what's going on, and gives you a good idea of what's coming about. One of these days, I'll try and get him to get a nice simple chart for the DYOR network, but he gives us his super trading charts that even I am like, I don't know what the hell I'm looking at. But I ask good questions, so I learn something new every day. And learning, helping my knowledge about the moving averages helped me out. And I read a lot about this stuff, and so I understand it. But seeing it in play and how it relates to other things else is the things that Pedro helps teach everyone. And that's what we do here. We try to provide a little entertainment with a little education at the same time. As I say, Thursdays is a little bit more lighthearted with Bitcoin and baseball. I'll probably be on the air again tomorrow because there's a lot to talk about. The SEC is dropping the alpha, as they say, all week. Now they're starting to leak details about the case and saying, oh, they moved money through the bank accounts. Of course they moved money through bank accounts. Every company that has bank accounts in different parts of the world, they say, I need to get money from here to there. They move money through it. So what? Who cares if they move money through it? Whatever. But it's stuff to talk about. Thank you, everybody. My name is Tom, otherwise known as Striking, here on the digital media world. When I hit this button here, my computer's probably going to freeze. So, Pedro, thanks for joining us in. We'll see you on another day on DYOR Live. So be there.